Welcome back to BLOCKTV. You're here with Trader's Take. Now, the public equity markets have started to regain their footing, but I can't say the same for the cryptocurrency space. And today, as we can see, it's red across the board for all of the top tokens. Volatility is a little bit reduced, so maybe there's something in store for the bulls. But let's take a look under the hood, see what the charts are telling us, and maybe we can find that Bitcoin bottom. So of course, we're going to start with Bitcoin. It's a little shorter term chart for you. And as you can see, what's been taking place is wedge patterns across the board, stair-stepping lower for the top token. Doesn't really seem like an ideal position for Bitcoin to be in. And we're expecting a little bit lower before that price capitulation and hopefully that bottom that everybody's talking about. But before we get into that, let's take a look at a longer term chart of Bitcoin and what's taking place. So as you can see, wedge patterns, stair-stepping lower. We're looking for support at 1800 to 2200 level, which is around the Twitter sphere. These numbers have been thrown out a lot lately. And as you can see, going all the way back to 10 years ago, kind of the beginning of Bitcoin, long-term support at that 1800 to 2200 level. And if we continue stair-stepping down from these wedge patterns, as I'm expecting, I'm going to be taking a look at that 2000 level to find that really true long-term support where that capitulatory bottom might take place. So let's take a look at the next top token. Now, what do we have? XRP. Last week, we had very interesting price action. Wedge pattern, XRP's coming to the end here, and the bulls come in to save the day. They push the token back into the pattern. And now volume is reduced a little bit. It's flagging. Can the bulls hold on to XRP, or are the bears going to take over and push it right back out? And is it going to stair step lower with Bitcoin and the rest of the cryptocurrency? Again, obviously, we have to wait to see. But right now, the bulls are a little bit in control, and the chart's being a little bit more productive than some of the other currencies. So looking forward, now what do we have? Let's talk about Ethereum, the second coin that we see. A little bit more bullish, but on the longer term chart, when you step out, not the best sign. So if we look all the way to the back, we're flirting with very, very major trend lines, very major support going back about a couple of years. Can Ethereum hold this? Are we going to break and see new lows? Now, the volume pattern is telling me that in and around these prices right now, this 100 to 75 level, the bulls are coming in to buy. But again, it's anybody's guess until we see a bottom where everyone is flushed out. Ethereum might trend lower. So as we look for the next coin, I want to draw our attention to EOS. Now, what I saw interesting this morning was I wanted to go a little bit shorter term for some of you day traders out there. Now, looks like there's room to run in EOS. It's been trading in this pattern, making higher highs, higher lows, and it's just about to enter a prime sweet spot of a volume pocket. And as you can see, between this $2.40 and $2.45 level, volume is almost non-existent. And if the bulls can come in and there's some buyers today and tomorrow, then I think we can see this thing skyrocket up to above $2.50, $2.60 maybe in line for a target. Now, if you're looking for a short-term trade, this might be your go-to coin. So moving on to the next coin, what do we have? Bitcoin Cash. Now, Bitcoin Cash, again, has been trading just like the rest of the tokens in these large wedge patterns that are dating back about 6 months. Now, it's pushing up against this upper band of the wedge, and $150 is kind of the price that I'm looking for. Now, if I was a bull, I would hope that the bulls can push above 150. They can close the price on a weekly chart, and then the chart's going to become a little bit more constructive. But for now, if they can't, again, I'm looking to Bitcoin to see what Bitcoin Cash is going to do, because again, Bitcoin is the most popular coin, has the most liquidity, has the most interest, and where Bitcoin goes, usually everybody else follows. So now moving on, I want to draw our attention a little bit away from analyzing coins and looking at some history. Now, I was sent an article this morning by the ladies and gentlemen over at Coindesk, and they did some interesting analysis on bear markets, specifically bear markets within Bitcoin. And they wanted to take the time duration of how long bear markets have lasted. Now, as you can see from the charts, we have bear market 1, we have bear market 2, and of course we have bear market 3. Now, what's interesting about the current bear market we're in is based on time periods, as of today, this is the longest. Second longest for 410 days, and today we are now on 411 days. But what's a little bit positive is that we've only gone down 82%, whereas in the other ones, we've gone down 93 and 86 respectively. Now, moving on into the Coindesk article, which is even more interesting and taking a look under the hood of the fundamentals of how the coin is traded, how the coin is mined. What we need to understand when it comes to Bitcoin, the mining of Bitcoin is inherently deflationary. And now, every 4 years, we have an event that's known as a halving event, which means that reward for producing and mining more Bitcoin is reduced. Now, in Macroeconomics 101, we can understand that if supply is reduced, demand stays the same or moves higher, then it's quite obvious to everyone that price appreciation is going to take place. Now, in this halving event, if rewards are reduced, like I said, and less Bitcoin hit the market, less new Bitcoin is getting put onto the market, then theoretically demand should go up, which means price appreciation, which means bottom of Bitcoin might be around the corner. But let's take a look at the chart that Coindesk put together. Now, if we look all the way to the back here, which is the first halving event that took place a few years ago, we saw subsequent price appreciation. Again, in the second halving event over here, again, halving event took place, price appreciation. Now, what Coindesk did when they analyzed the numbers is they came up with an average. They said the average of 458 days before the event takes place has been a bottom in the last 3 bear markets for Bitcoin. Now, as you can see from the chart today, we are 497 days out till the halving event takes place. Now, is this the bottom for Bitcoin? Well, according to this chart, we're either at the bottom or we're approaching the bottom. But again, it's anybody's guess what's going to happen. I'm a little skeptical on this. I want to see some capitulation. I want to see people running for the exits, and I want to see massive price drops before the bulls come in and can push this higher. But again, this is something to hold on to. This is an interesting event that's going to be taking place within the fundamental market, the market structure of how Bitcoin trades, how it's invested in, and perhaps this halving event that's going to take place in 2020 might be something to keep an eye on. But for now, that's all we have on Trader's Take. Trade 'em well.